Hey folks, David Frost, MyStrategicForecast.com. Welcome to another episode of Common Sense Technical Analysis. Today we're going to have a free trade alert on Twitter. So let's take a look at right now you're looking at the weekly chart on Twitter. And you can see that this is one ugly chart. There's really nothing good here. Under normal circumstances, this would be a no-trade chart. We made new lows after a recent IPO from last year. There's just no history to go by and where the supports would be. However, so here's what I'm looking at, and here's why there's a trade, potential trade, if you would like, on Twitter. I took the trade. So I'm in Twitter, and here's the reason why. Here is a really high volume reversal week. Not reversal, but it's a high volume throw up week. So, you did, in this week, the volume was almost 300 million shares, and now we went sideways for a couple weeks, and that could be construed as bearish. However, here's the risk reward. This is why this makes up a trade. Because your low here on the weekly chart, and I'm going to go over to the daily in a minute, but your low is 29.51. So keep that in mind, 29.51. Now let's go take a look at what the daily looks like, and you see a slightly different picture. You have to want to see it. So here's what it is. Here's that low at 29.51. Okay. Now you're making some higher lows potentially here, and this is why this becomes a trade today. Okay, this could be construed as a doji. This is a narrow body bar. This is making potentially a higher low, and if I'm wrong, okay, I know where I'm wrong. If you get a close below 29.51, I'm out. It's a 2-point trade. It's a 2-point risk, okay, for an upside that could be easy up to this moving average here. This is the 20-period moving average. And certainly you can get to this gap window over here at about $35.70 to $36. Okay, and if it's really going to shoot up for some reason, unbeknownst to anybody today, 38's the number. And there's a lot of support here at 38, or resistance. So that's why it's a good risk-reward trade. So therefore, taking Twitter is a low-risk reward with a $2 stop out on a close below 29.51. Your upside, you can be looking at taking some profit off the table if you hit 34.50, 35, and then you can let the rest ride and see what you get out of it. But that's my story on Twitter. It's a free trade alert from MyStrategicForecast.com. I'm David Frost, Common Sense Technical Analysis.